Hey everyone, John Henry from School of Trade. Today we're going to be taking a look at a short here on gold. Today is inventory day on crude oil, so instead of trading the old crude, we like to take a break from it on Wednesdays and switch over to a market that is a little less, what's the word? A little less angry sometimes. So really what we're looking at here on gold is a potential breakdown. I'm looking to sell at 1357.9 with the understanding that the buyers are essentially falling apart. Now, if we zoom out, it's hard to say that the seller or the buyers are falling apart because they've been going since yesterday afternoon. There is a heavy bullish bias. And that's actually why I'm looking for this short move to continue. It's the biggest bear bar of the day, which is pretty apparent. And because of that, as we saw a couple trade of the day videos ago, people will buy into that, assuming that it's going to go for a scalp. And you definitely can do that in this situation, given the bullish context. But we need to put this kind of all in a row here. Big move up. Buyers who maybe weren't here at 8 o'clock last night trading this, or maybe weren't here at 2 in the morning trading this, they never really had a chance to buy down here. They had nice pullbacks in the European session, but this is the first pullback that we've had in the session of the US where we're actually getting a chance to get in. But now, if this is a pullback, why is it forming such a massive bear candle after it failed to go above those highs? It tried pushing above the highs, the buyers showed up, big wick on the top. They tried to continue, another big wick on the top, failing beyond that next swing high. Buyers are just not showing any emphasis at the highs here, and if anything, all they did was form a little range here, and it slammed lower. That's not indicative of continued bullish movement. So what we're looking for is we're looking for a bearish correction. We want to see the sellers take it for a little while so that the buyers can buy it at a better price. Buyers are obviously sick of buying all the way up here, all the way up here, all the way up here. So because of that, we need to know that the buyers, they're just done buying this high. And that essentially means that all we're left with is a correction so that we can get the buyers to buy in at a better price, something that they will find more suitable. Now, for them, more suitable, it's kind of a relative term. You know, it could be underneath these lows here, not too far away. It could be a big drop lower to before when that spike started in yesterday afternoon session. So it's really open-ended right now in terms of, you know, where do the sellers want to go? We know that they definitely want a correction, and mainly that's just because the buyers want to buy lower. They don't want to buy all the way up here, so they're going to be looking to get in farther down. So selling down here at 57.9, our stop goes to 61.9, and that means that we need to make sure that our target is at least equal to our stop. That way we don't give a bad risk reward on the trade, so that is going to be our objective to the downside, and that's very likely going to be the objective of a lot of sellers. So, knowing that, if you are a buyer, what's the best place to look to buy? Right where the sellers want to get out, right? So knowing that area of interest, 53.9 is going to be that line in the sand. That's where the sellers are going to begin taking profit on the shorts here. And that's also where buyers are likely to start scaling in back to push the market towards the highs if they are going to show up. So right now in the short, looking for a move down to 53.9, just a one-to-one trade short, relatively large stop given this huge bear candle that we have here. But overall, we're just waiting to see if the sellers want to show up to the party. We do know that buyers will be scaling into this for a quick scalp to the upside, but as long as they don't breach that high, we are good to go. So we'll let them kind of duke it out around this area, but overall, looking for the sellers to take over in the short term down to 53.9. Seeing the sellers driving to a new low. With this new low, after the small little pullback that we had here, again, this was buyers buying into it and scalping out, and they got their scalp. So now that we know that the buyers are out of the way and we have turned back to a new low, we can reduce our risk because I don't want to see the high of that broken anymore. If the sellers are going to take this over and double down on this big bear breakout move here to try to get the correction, we should never come back to this high. And if we do, I don't really want to be in the trade anymore. So my stop is going to move down to 59.8. And I want to see them finish the job sooner rather than later. Nice big push, one tick away. So with one tick away, we're going to reduce the risk even further above the current candle. So my stop is going to go to 57.9. Now we need to see them finish the job. Overall, beautiful move down. That's exactly what we were looking for, but they need to finish it off. Because we've come one tick from the target, I'm not interested in giving anything back on the trade anymore. It did what it was supposed to do. It just happened to not go that one extra tick. So we'll give it a little bit more time here to see if the sellers can finish the job, but overall risk is reduced to 0 and our target is still underneath at 53.9. Sellers pushing back down again. We are at a small little double bottom here at the lows at 1354. We need to see the sellers push through this low to finish the job here. Now, one area of interest, if we do get a correction at this point in time, because we've come one tick from our target twice now with a small little double bottom, we want to try to lock in at least a little bit of profit. The most recent swing low that we broke under was at 56.6, and we have resistance on the weekly chart at 57, so I'm going to move my stop above that. Now, if it does come back and stop us out, it's not awesome to give back that much, but at the same time, you don't want to choke the trade out either. In this way, we at least guarantee that it's going to be profitable either way. In this case, I push down, we get the target filled, so a nice little pop lower, and that's exactly what we were looking for. Now, this is the area where buyers are anticipated to begin trying to scale in. It doesn't mean that this is where the market is going to turn around and rocket to the highs, but there's a good chance that buyers will begin scaling in here knowing that the sellers got their objectives to the downside, and it's a good place for a long-term buyer because, again, if you zoom out, long-term buyers, this is nothing more than just a correction so far. The bears need to prove a lot more than just this to be able to reverse this kind of bullish emphasis. So buyers right now will be looking to scale in for a move back up to the highs. Doesn't mean that it's going to turn here, but you would anticipate seeing some bounce at least in this area because sellers are getting out and buyers are getting in. No more sellers left. So that's going to do it for us. So beautiful move down. Did exactly what we were looking for. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.